Let's talk about Microsoft, a company that's become such a titan of the tech world, it's almost hard to wrap your head around just how massive it is. I mean, it's dominated computing for decades, right? But lately, it's hit a valuation that's just staggering. So the real question is, after a run like that, can it possibly keep going up? And when I say staggering, I mean it. As of late 2025, Microsoft's market cap blew past $4 trillion. That's a T. 4.03 trillion to be exact. I mean, that's bigger than the entire economy of most countries on Earth. This isn't just some number on a screen. It's a huge vote of confidence from the market about Microsoft's future. Which brings us right to the heart of it, doesn't it? After this historic, incredible run, can this giant actually keep growing? Or have we finally hit the peak? So today, we're going to dig into both sides of the coin. First, we'll look at the bull case, the argument for unstoppable growth. Then, we'll flip it and explore the bear case, the search for cracks in the armor. And finally, we'll see what the hard numbers from the analysts are telling us. All right, let's kick things off with the sunny side of the street, the bull case. And look, this isn't just about Microsoft being a solid company. This is about some seriously powerful, fundamental advantages that could launch it to, well, even greater heights. The whole bull argument really rests on three main pillars. First up, and this is the big one, its huge push into AI and the runaway growth of its cloud platform, Azure. Second, you have this incredible lock-in effect it has on big business customers. And third, its genius ability to weave all its products and security together into one neat, indispensable package that's just incredibly hard to quit. So the real engine room for Microsoft's future? It's Azure, no question. And that engine is just firing on all cylinders. We're talking 39% growth last quarter, and this isn't just your standard growth. This is being supercharged by a massive surge in demand for AI services. You know, it's not just us saying it. The analysts are definitely paying attention. I love this quote from Morningstar's senior analyst, Dan Romanoff. It just sums up the feeling perfectly. When an expert says the results look good from all sides, well, that's a pretty powerful sign that the company is firing on all cylinders. So what's their secret weapon? It really comes down to this concept of a wide economic moat. It's a term Morningstar uses for a company that has a lasting, durable, competitive advantage. For Microsoft, this is everything. Just think about it for a second. How many companies out there could realistically just, switch away from Microsoft Office tomorrow? The cost, the chaos, the retraining, it's just a massive headache. That's what we call a high switching cost. And that, plus the power of everyone else being on Azure and Office, creates this massive wall that's really, really tough for competitors to break through. Okay, but it can't all be sunshine and rainbows, right? No company is invincible. So let's flip the script and look at the other side of the debate, the bear case. This is where we start looking for potential speed bumps and the reasons why that incredible growth might not last forever. Now, the first point the bears bring up is interesting. Yeah, Azure is an absolute beast. It's a clear leader in the public cloud space. But, and it's a big but, it's not the leader. It's still playing second fiddle to Amazon's AWS. And in a market this fierce, being number two means you're in a constant, incredibly expensive dogfight for every last bit of market share. And it's not just the cloud competition. The bears also point to a few other potential trouble spots. You've got products like Office, wildly profitable for sure, but they're mature now, so their growth is naturally starting to slow down. The company also doesn't really have a major presence in the mobile space, which is still totally dominated by Apple and Google. And finally, you have to consider the risk from these huge, expensive takeovers, like the nearly $70 billion deal for Activision. Trying to absorb a company that big is a monumental challenge, and any slip-ups there could really hurt the bottom line. So we've heard the stories and the arguments from both the bulls and the bears. Now let's try to ground all of this in something a bit more concrete. What are the financial analysts actually saying? Let's take a look at the numbers. Okay, this right here really shows you the potential upside that analysts are seeing. As of late October 2025, the stock was trading at about $541. But check this out. Morningstar, one of our key sources, puts its fair value estimate at $600 a share. That tells you they think the stock is still a good buy, even after its massive run-up. And Morningstar isn't some lone voice in the wilderness either. The consensus price target from a whole bunch of analysts tracked by MarketBeat is even higher, coming in at over $617. That shows a pretty widespread belief on Wall Street that there's still plenty of gas left in the tank for this stock to climb. So what's fueling all that optimism in the price targets? Well, take a look at this.
This is Morningstar's revenue growth forecast. They are not predicting a slowdown, not at all. In fact, they're modeling sustained double-digit growth for years to come. We're talking nearly 15% in fiscal 25 and over 15% in 26. For a company this huge, that kind of growth is it's absolutely remarkable. It paints a very clear picture of just how powerful they expect this growth to be.
So there you have it. We've walked through the powerful bull case, which is all about AI and the cloud. And we've looked at the very real concerns of the bear case, from fierce competition to aging products. So now, I'm turning it over to you. You've seen the arguments, you've seen the numbers. What do you think? Do you believe those 3 pillars of the bull case are strong enough to keep pushing Microsoft to new heights? Or do those headwinds that the bears are pointing out give you some serious pause? I really want to know what you think. Drop a comment below and tell us which side you're on, bull or bear. And more importantly, tell us why. Hey, if you enjoyed this deep dive into the bull and bear arguments for Microsoft, do us a favor and hit that subscribe button. We break down the world's biggest companies just like this every single week. And coming up next, you are not going to want to miss our analysis of another tech giant, Alphabet. Thanks for watching.